Everybody, Spartan here from SpartanTrading.com. Want to hit you guys with a educational video this week, and in this week I'm going to talk about why anyone would use multiple time frames on their day trading or swing trading. So pretty much why using multiple time frames in trading is important. Let's talk about that. Now, when we're swing trading or day trading, typically people will use one time frame when they just start out with 5 minute, 3 minute, 1 minute, 10 minute, 15 minute, whatever. Hourly, daily for swing. And what happens is when you only use one time frame, you start to focus on only the levels that you see, only the information that you see, and you miss all the stuff that you aren't seeing. As we know, a chart is made up of a whole bunch of different patterns, support, resistance levels, EMAs, all these different things. The farther you look left, the farther you look back in time, the more of this information you're going to see. The more resistance levels, support levels, EMAs are going to move with the chart as time persists, but the more trends, etc., in the longer term, you're going to be able to recognize. If you're only using a short amount of time frame, 5 day, 5 minute, you're only going to see what's in that 5 day, 5 minute. So using multiple time frames is important because it gives you an ability to see all those different support, resistance, trend lines, etc., so you may make better decisions off of them. That's important because obviously risk reward, if you're going to trying to determine where something has room to, we need to understand where the next resistance is if you're going long or where the next support is if you're going on the short side. Of course, we should know what our risk level is based off of what your max risk is, or you could essentially be using a EMA or trend or whatever, what have you. So if you're let's say an intraday trader and you're using, let's say, a 3 minute chart to trade, you can certainly use a 3 minute chart for entries. But you should also have a daily chart up, which would explain or show you. And let's look at something like ACY today. ACY. So ACY on the 3 minute chart, you can certainly use it for entries. You can see, flag breaks, EMA curls, whatever, and what have you. But the dailies is what's going to show you where the major support or resistance levels are. So we can see the major resistance levels are the major highs or previous day highs on ACY at 22. 55, $28, so on and so forth to the upside, which could potentially act as resistance levels. So with two time frames up, I can see two things at the same given point in time. Very quickly for me to be able to recognize I got an entry here and I can see where the next resistance point is at the exact same time. Now, if you start to use even more time frames, like what I'll typically use is 3 time frames intraday, and let's say you used a 3 minute, a 15 minute, and a daily. You can then go, okay, I'm going to use the 3 minute for my entries. I'm going to use the 15 minute chart for after my entries are done in order to stay in the position and make sure that, as long as that trend's holding, maybe it's an EMA support that's holding, that you stay long the position so you don't get shaken out of the trade. And then you again use your daily for those levels to the upside. So essentially you now have a system for entering, a system for holding stuff intraday using a longer term trend so you don't get shaken out of those smaller time frames, and then that daily chart to figure out where your reward levels are or where major support or resistance levels are on the daily. Now, if we're swing trading, we can do something similar. If you're doing short-term swings, you could be using a 60 minute for entries, daily for levels. You could be doing, let's say you're using or looking at doing longer term swings. You could be using for entries in a daily. You could be using the weekly or monthly on Apple, for instance, as your target levels to the upside. There's a lot of different ways you can do it, but essentially using different time frames or multiple time frames on the same chart allows you to see more information that you can make a better decision based off of as you're trading. So very effective. I do it. I'm sure that there's a lot of professional traders that do it. I would say 99% of them will look at multiple time frames on the same chart. And yeah, I think it's a great idea and a good idea to start using it if you're not. So this is more so for the newer traders, something that probably won't be told unless you read up a whole bunch of books or whatever, but hopefully you can grasp something from this webinar fairly quickly, or this little video very quickly. Anyways, if you guys have any questions, you can go to SpartanTrading.com. Otherwise, thanks for watching, and we'll talk to you guys next week. Have a good one.